What's good, everybody? Happy Tuesday. Look, the markets are killing it again. The markets were up again. The Dow was up 104, the S&P was up 3, Nasdaq was up 6, and this officially marks the best start to any year going back to 1987. Here's the problem. You know what else happened in 1987? Google Black Monday 1987, and just read the first paragraph of what happened in 1987. So hopefully not a sign of things to come. I'm certainly not making that prediction. Just kind of interesting that the best start to the year since 1987 also, you know, that was a pretty scary year for a moment there. Anyways, look, the markets are higher. And if you're watching financial news, they have zero reason for telling you why the markets are going higher. All they keep saying is economic optimism. It appears that people are very optimistic about the economy and the future. That's fine. I'm not complaining. The markets are higher, but just know they do fall. Markets actually go down sometimes, and when they do, it can be a bit of a scary day or two. But look, it's incredible, this market rally. So let's get into some stocks that are actually causing your retirement accounts to see some gains today. We'll start with Target there on the screen. Target absolutely killing it over the holiday season, but I want to warn you about something here. Here's the chart. I'm going to show you this real quick. Today's Target was up 2.9%. Basically, they came out and they said their holiday sales grew at 3.4%, which was 3% higher than what they expected. But here's the trick, and this is really, really funny when you watch these companies do it. Nothing against it. I mean, it's a great strategy. What they did, if you go back to their earnings at the beginning of November, they released their earnings, okay, wasn't bad, but they actually announced that they set the bar low for the holiday season. So what they said is that the holiday season may not be as strong as we'd expect. They were expecting growth of 0.2%. So now when they get to this point and they make the announcement that it was way above everything everybody expected, it makes it so like, oh my God, good job, guys. You know, it makes everybody look at Target. When in reality, the stock price really is reflecting the fact that they set the bar really low and then they just beat what they said they would maybe accomplish. So it's very popular on the public companies for them to announce something that makes Wall Street say, okay, you said you were going to grow here. Oh, now you're only going to grow here. Stock price tends to take a hit on that day, but everybody brings down their assumptions for growth, retail sales and everything. And then Target comes out and beats it by a little bit and everybody's shocked. Oh my God, it's better. Oh, this is great. So it's a very common strategy. I'm going to bet that that was the strategy used here on Target, and it paid off quite well. Tesla, also very good at that strategy if you're paying attention, but we're going to talk about them in a second. So that's Target doing really well, helping the retail sector today. Target's a great store, you know. I mean, if you put Walmart next to Target, people will pay more to go to Target because it's just nicer. Anyways, let's take a look at Under Armour. Not so nice. Under Armour got a downgrade today, and if you've been watching these videos for a while, you know that I talk about how analysts on Wall Street will study companies, they talk with the executives, they formulate, their opinions, and then they give analysis based on how much they think the company is going to make. From time to time, these analysts will upgrade or downgrade the stock. So if they think the company is going to do well, they will announce an upgrade, give their recommendation, and they'll even put a stock price out there that they think it can get to. When they don't think a company's going to do well, like Under Armour, they'll do a downgrade. And boy, did they do a downgrade today on Under Armour. This was one of the most nasty downgrades I have ever seen from an analyst, especially a large one. The company's name is Susquehanna. If you can spell that out, search it. Great company. Unbelievable what they do. They're so smart what they do. Anyways, company downgrades the stock, puts an $11 price target on the shares. Today it closed at 14. So that means another 20% down from here that they're thinking, basically back to the lows, which are almost off the bottom of your screen. Here's the thing though, when analysts upgrade or downgrade stocks, they like to throw in their opinion, they put their 2 cents in there. This guy beat the devil out of Under Armour saying, where is it? I got to find the quote for you. He said that their brand management and promotional environment was very poor, lowered his price rating, and then he says, they felt that the company's brand position will continue to be weakened before it is salvaged, and they even suggested that Under Armour pull out their products from Kohl's, DSW, Famous Footwear, and try to rebuild more of a sort of exclusive brand. If you get a chance to read what that analyst said, if you're even interested, that was the hardest I've seen an analyst come down on a stock in a while, and the stock was down 4.6%. They've got a lot of work to do there, right? They've got a lot of work to do. ILMN, you've probably never heard of this company. This is a biotech. It falls into the biotech space. I don't look at a lot of biotech stocks because they can be unbelievably unpredictable. This stock was up 7% today, was the leader in the Nasdaq. It was your best performer today. Definitely helped any of your tech-related holdings, your Nasdaq-related exchange-traded funds, anything like that. This would be the #1 performer inside of it. Basically, the company, really cool what they do. They do genome testing, but they actually make the machines. They don't you can't send them your blood and they'll test it. They actually make the machines that they provide to companies. So if you think of companies like Ancestry.com, 23andme.com, if you've had your DNA tested, chances are they use one of these machines. Now, the company just announced a new machine. It's actually only going to cost people $20,000, so kind of a steal, right? Considering their other machines are from millions down to 100,000. But this is a desktop genome sequencer. How cool is that? The idea was the company's going to release this to other companies to buy it for about $20,000, and you'll be able to, the end consumer will now be able to get their DNA sequenced or check their blood for cancers and things like that for now like $50 is what they'll probably bring the cost down to. Whereas now I think it's like 200, maybe 250. Comment in the section below if you know, if you've ever done it before. My wife's wanted to do it, and I think it was $199 at the time. But anyways, this is going to bring down the cost. And I just want to share something with you real quick. I'm not going to actually hit enter. I'm going to put in this website. Here we go. Let's put it right here. This is their website. Ready? I'm going to hit enter. Here it comes. Oh, what's going on there? Well, that's a website. You can't even do anything with the mouse. If you try to click away, it just keeps playing. And it shows this new sequencer. That's their brand new desktop sequencer. I just thought that was cool. That was a pretty unique website. I don't have a website that cool. And lastly, let's get to the last thing today. It's kind of related to Tesla. It's kind of the big blooper story of the day that you'd see on ESPN if this were sports related. So SpaceX, the other day they launched their rocket, right? And inside of it they said, oh, it just has a satellite. It's just, don't worry about it, it's a satellite. And so it was actually live. I went outside in my town. I could actually see it. Beautiful, beautiful thing. Everything looked to go perfectly well. They cut the live stream. They live stream all of their launches. They cut the live stream, and because it later came out that this was a highly, highly classified government satellite, where they wouldn't even comment what government agency, or even if it was our government agency, they didn't even say that. Highly classified, big, big bucks. And apparently they may have lost the satellite, and now they're thinking that it might have fallen back to Earth and burnt up in the atmosphere on the way down. Nobody is saying a word. They can't say a word. It's all speculation at this point. Normally Elon Musk would be tweeting, yeah, we just did a great job. We launched another rocket, whatever. Nothing. They are silent. One, because they made some government really mad. Probably our government, some agency we've never heard of. They made them very mad. They lost their satellite. They can't account for it at the moment, or at least that's what they're saying. So I thought that was funny. It's one of those things like, you have one shot to not mess this up. They've done great. I'm not bad-mouthing SpaceX. They've done great this whole time, but this one thing goes wrong at the worst possible moment. I hope everything's okay there, because I really like Elon Musk. I like Tesla and SpaceX and Solar City also. Please come to my neighborhood, Solar City. Anyways, that's it for the markets today. Hey, grinding higher. Not much to say. Markets are higher, higher, higher. They have not had a down day yet this year. We'll see what tomorrow holds. Be sure to check out our website, jazzwealth.com, if you're interested in retirement accounts or having someone manage it for you. I'm here all day staring at this stuff. Thank you for watching. We'll talk to you soon.